Hello traders, and welcome to another educational video brought to you through FXCL Excellence in Trading. Hello traders, and welcome to the Market Open Preview, May 2nd, 2014. It is a Friday, and it's non-farm payrolls, the big data alert of the month. This is the big one. Everybody likes non-farm payrolls, except for me. Alright traders, it's great to be with you on a overcast, cloudy day in Thailand. So let's get started and let's get to the charts. But before we do that, if you would give me an opportunity to introduce myself to you. My name is William K. Gilday, and I will be your moderator through the Market Open Preview series. Traders, I've been trading from 2006. In 2008, I retired from the Fire Rescue Department in the great state of Florida in the United States. And 10 days after I retired, I came to Thailand and never went back. I'm still here, traders. And I've been trading full-time since 2008. And it's just a great career and a wonderful adventure. We're having a great time. I love what I do, and I hope you do too. Okay, let's get to the charts. But before we do that, let's grab over here and take a look at the legal stuff. Traders, this is our risk disclaimer. Remember that Forex trading has a large potential of rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. Traders, don't trade with money you cannot afford to lose. If you're trading your mortgage payment, maybe you need to rethink that, and maybe you need to go to a demo account until you can trade the live markets comfortably. Okay, let's get to non-farm payroll calendar. The big non-farm Friday calendar. This is what we got coming up in the Euro session and the US session. We have, out of the Euro session, we've got German manufacturing PMI. And out of the Euro session, we also have the unemployment rate. The big number coming out in the beginning of the New York session is the non-farm payrolls coming out. They're expecting 210,000. I don't know if they're going to get that, to be honest with you, traders. I'm looking at more like 190. And also the unemployment rate. So that's the news that's coming out. I would expect the markets to get pretty dull about 2 to 3 hours before the news release. They normally do slow down, and traders just don't trade coming up to the big event. So hopefully we'll get some trades in the opening of the London session and through most of the London session. Once you get into the London lunch, traders, I would expect that markets will go flat. Okay, let's get to some currency pairs. Pick two out today. First one we're going to take a look at, traders, is the USD CHF, the dollar Swiss. Traders, this is a daily chart, and you can see on the 200 exponential moving average, which is the green line on my charts, that is sitting at 0.8975. You can see that this pair is an extensive move to the downside. I don't think we have any questions with that. Traders, let's take a look at the 1 hour chart and see if we have a trade set up. Okay, this is the dollar Swissy on the 1 hour chart. You can see that I did a fib level from the high to the low. Traders, that red arrow at the blue target box, entry box, is not meaning to go long. That is just to show you the box. I should have changed the color of the arrow, and when I started going through the slides, I realized that I should have changed the color. That is to alert you to the box, not to go long there. We actually want to go short there, right? Because we're looking for short trades, as this pair is very bearish. So we want to come up to that 38.2 area, 50% fib there. We want to take this down. I know I don't like it either. We have that 200 exponential moving average right there, and either going up or coming down, we're going to hit that, and that could be trouble. So modify the trade plan and just really pay attention if we get to the 200 EMA that you might have to take you short there. You have plenty of pips to get down to our take profit area, and you can see that on the bottom of the chart. So that should not be an issue. Also, risk to reward is fine at either place that you enter the trade. So either place on this 1 hour chart, we are fine, risk to reward, and our stop is in a good spot. It's a good trade. The question is, will it get up to our 38.2 level and give us the short, or we're going to have to short from the 200 exponential moving average? So we'll just keep an eye on that. But looks like a nice trade. if we can get this in the London Open or the first part of the London session. Traders, let's go to the 15-minute chart and take a look. Traders, I wasn't really too impressed with the 15-minute chart for a trade setup. We're now sitting at below the 200 exponential moving average. You can see I have my stop above that. The other problem is we have a trend line coming up below it. Where price is right now, I really don't like that. I'd really like to see a pullback to that 200 exponential moving average at 87.99. Bring that back down. At least we'll have some pips in the pip basket if we get into trouble with the trend line. The other option is wait till the trend line breaks, retest of the trend line, and then take it short from there. That's not a bad idea. Remember, we sell at resistance and we buy at support. So I don't have a problem with breaking the trend line. I would definitely want to see it, break it, retest it, and then do it again. On a 15-minute chart, that might not take a lot of candles. That might only take 3 or 4 candles, and you can be in the trade. The stop for the trade is going to remain the same. It is above the 200 EMA. Alrighty? So that's my take on the dollar Swiss. It has been moving some pips. I think it's moving an average about 86 pips a day. So it's doing well, and I think it's a good currency pair to trade. We'll just have to watch that it is non-farm payroll day on a Friday, and we'll take really good eye on it at the London Open. Traders, let's move on. I know we've done a lot with this pair, but I just wanted to come back to it again, and that is the euro-dollar. Euro-dollar is always a nice pair to look at on non-farm Fridays. It moves, it does its thing, and hopefully we'll get a nice trade today. Traders, I'm just looking to take this in a bullish pattern. I've said this the other day that this pair is absolutely bullish and there's really nothing else to do except go long. So we need pullbacks and we need to take this long. If you're trading the daily chart, wait for it to come back to that trend line. That's a 3-touch trend line. That's a valid trend line. Wait for a bounce off the trend line and then take it to the long side. That is about it on the daily chart. Traders, let's go to the 1-hour chart and see if we have a trade set up. Okay, here we go. Euro dollar on the 1-hour chart. I like this trade setup. I think it's a really, really good setup on this hourly chart. The best one out of all of them. We're just going to wait for this to pull back. You can see where our entry box is. You can see that the red arrow is inside the entry box where it belongs to show you that that is where we want to, in that area, is take our entry. And we want to take this long. You can see where our stop is. And we're all good with that. The stop is at the 23.6 fib. That's a great place to put it. We'll take that there, and we're going to take this to the long side. We should be good for the entry at our entry box because what's right below it is the 200 exponential moving average at 1.3840. That's a good spot. Nice psychological area for a nice bounce, and we'll take that to the upside. The take profit is 1.3900. That's what we're looking for. So we're looking at a good 60 to 65 pips in this trade, depending on where we enter. And that's looking nice. This is a really nice trade setup. We're going to keep my eye on it. I've got some alarms set, so I'll get alerted. And we're going to keep a real tight watch on this. Hopefully we can get this trade in and complete by London lunch. Okay, let's take a look at the 15-minute chart. Wow, look at this. Traders, this is the 15-minute chart. You want to talk about low volatility. Look at those Bollinger Bands, curled and tight. Look at the candles. They're weak, they're short, they're small. Not something I really want to touch. I would look for the bounce off of the 200 EMA, but we need to see some candles that mean something and some candles with some meat in them. These candles are weak, and I'm not looking to enter this. I think the 1-hour chart has a much better trade plan, and that's where I think I'm going to stay, is with the 1-hour chart. Traders, if you can't afford the drawdown on the 1-hour chart, just lower your lot size, and you can make up for it, and you can still trade the 1-hour chart. I don't think this 15-minute chart is going to do anything before London lunch. It might. I hope it does. I'd rather enter and exit on a 15-minute chart, but the 1-hour chart looks like it is going to be the chart to watch today at the London Open. Traders, on behalf of myself and FXCL Excellence in Trading, I'd like to thank you for joining me on a Friday. This is our market open preview. Please remember that after the New York session, we will have the Friday wrap-up that we will do after the New York session, and we will have the Friday wrap-up. Looking forward to doing that, traders, and we'll do a rundown of the non-farm payrolls data release. Traders, thank you so much, and remember, trade safe and trade smart. Till next time, traders, have a good day, and bye-bye.